Bitcoin price today fluctuates around $107,700, trading below key exponential moving averages, while support is tracked at $104,000, $105,000. BlackRock Sales ahead of the Federal Reserve meeting are pressuring sentiment, and repeated 300 Bitcoin blocks are intensifying downward pressure. Net outflow of $200 million will not be able to offset institutional sales, leaving BX vulnerable if resistance at $112,000 is not overcome. Bitcoin price today fluctuates around $107,700, under pressure after repeated sales by institutional investors. This move has again shifted attention to the support range of $104,000, $105,000, as the market prepares for the Federal Reserve decision. Bitcoin price dynamics show a clear rebound from 20 and 50-day exponential moving averages, centered around $112,500, $113,800. The price fell below the dotted upward trend line and is again testing the broader demand zone at $107,000, $105,000. The 200-day exponential moving average at $108,000 has also become a limit after a failed rebound. The relative strength index is near 39, confirming weak momentum and leaving the risk of decline if buyers fail to hold this zone. This technical context keeps the trend toward forecasting Bitcoin price toward retesting October lows, unless bulls overcome the mark at $112,000. The news flow has sharply turned negative after reports of BlackRock selling Bitcoins ahead of the Federal Reserve meeting. Transaction data shows the company regularly selling blocks of 300 Bitcoin, further deteriorating market sentiment. Such activity has sparked debates on whether the sales are related to rebalancing liquidity needs, or attempts to pressure leveraged positions. Traders claim this explains why Bitcoin price today could not hold above $110,000 despite short-term gains. For investors, the sales highlight why Bitcoin price volatility remains high ahead of key macroeconomic events. On-chain flows are another piece of the puzzle. The Bitcoin spot transaction inflow/outflow chart shows a net outflow of over $200 million as of October 21st, with overall exchange flows remaining negative over the last month. Typically, steady outflows are seen as accumulation, but against the backdrop of ongoing institutional sales, these signals are overshadowed. This discrepancy suggests that while some investors are withdrawing coins from exchanges, the impact of large portfolio liquidations dictates short-term decisions. Bitcoin price updates reflect this tug of war, with spot levels squeezed between strong selling pressure and a sustained but weakening support base. In the near term, the zone of $104,000, $105,000 is a must-hold. A decisive break lower would open access to $100,000, and then to deeper support at $92,000, last tested in early spring. Relative strength index momentum near oversold values warns of potential exhaustion, but as long as buyers do not reclaim $112,000, the path of least resistance will be downward. On the other hand, a clean rebound from $113,800 would neutralize the bearish trend and open the way to $120,000. The aforementioned cluster of exponential moving averages remains the main barrier that bulls need to overcome for any optimistic Bitcoin price forecast to hold weight. At this point, Bitcoin price data points to a fragile balance. Bears maintain short-term advantage as institutional sales and macroeconomic uncertainty dominate. Bulls still have a chance if support at $104,000 holds, and inflows resume after the Federal Reserve decision. A rebound above $113,800 could restore momentum and trigger a broader recovery, but failure to hold current levels is likely to lead to another drop to $100,000 before buyers decisively step in. According to analysts, Bitcoin's price faces a challenging period as long-term holders continue to lock in profits. The inability of cryptocurrency markets to recover was caused not by manipulations, paper Bitcoin, or suppression, but by good old sellers, analyst James Check stated on Sunday. Check added that the volume of pressure from existing Bitcoin holders is still not recognized by the general public. This pressure has become a source of resistance at the moment. The analyst published a chart showing that the average age of spent coins has been increasing throughout the entire cycle. This indicates that it was precisely long-term holders who were selling. Another chart showed that realized profits surged to $1.7 billion per day, while realized losses reached $430 million per day. This is the third largest indicator in the current cycle. Meanwhile, the renewed supply of old coins reached the second largest level at $2.9 billion per day. Old coins are returning into circulation as long-term owners lock in profits. Crypto investor Will Clementi stated that the last year of relative BX weakness was mainly linked to the transfer of supply from startups to traditional financial institutions. This is clearly visible in on-chain data. This dynamic will practically have no significance in the coming years, as everyone is focused on Bit's relative weakness.
Galaxy Digital CEO Mike Novogratz supported this view in an interview with Raoul Pal on last week.
In the Bitcoin world, there are many people who have been doing this for so long and finally decided, yeah, I want to buy something, he said, mentioning friends who acquired a yacht and became members of a sports team. People are saving because they had a great run, and we're just digesting this turnover. Novogratz confirmed that the only supply his company observed came from old Ogden miners.
According to TradingView data, Bitcoin is holding a support level.
The weekly candle closed at $108,700. If we continue to hold this level, the price could eventually rise to more than $120,000. Stability here is absolutely crucial, analyst Rect Capital stated on Sunday. At the time of writing, the asset rebounded to the $110,000 level, but just above this mark, it faces new resistance.